Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world's secret language. Today, we're diving into a report from Aditxt, and trust me, it's a bumpy ride. Let's just say it involves stock splits, potential delisting, and a whole lot of financial maneuvering. Buckle up, it's going to be interesting. Aditxt filed what's called a Form 8K. This is basically a company's way of shouting, hey, something important just happened, to the Securities and Exchange Commission, or SEC, and to investors. In this case, the important things have to do with staying listed on the Nasdaq stock exchange and a big change to their stock structure. The first big issue is that Aditxt received a warning from Nasdaq back in October. The warning, the October notification letter, said their stock price had been below $1.00 per share for too long. Nasdaq has this rule, Listing Rule 55E5T2, that says a company's stock price needs to stay above $1 to remain on the exchange. They gave Aditxt until April fetch Rule 5 to get their stock price back up. Unfortunately, things got worse. In March, Nasdaq sent another notice. This time they said Aditxt stock had been trading at $0.10 or less for 10 days in a row. Because of this, Nasdaq has decided to remove Aditxt stock from the exchange, which is also known as delisting. Basically, it means the stock won't be traded on Nasdaq anymore unless they can turn things around. Now, Aditxt isn't just giving up. They plan to fight this delisting. The company intends to submit an appeal. By appealing, the delisting is put on hold while a Nasdaq hearings panel makes a decision. At the hearing, Aditxt will try to convince the panel that they have a plan to get their stock price back up and meet Nasdaq's requirements. However, there's no guarantee they'll succeed. The panel usually makes a decision within a month after the hearing. To try and boost that stock price, Aditxt went to its shareholders and asked for permission to do something called a reverse stock split. Think of it like this. Instead of having a pizza cut into 8 slices, you cut it into just 2. You have fewer slices, but each slice is much bigger. In this case, the company is decreasing the amount of shares that exist to increase the price of each share. At a special meeting, the stockholders said yes to this idea. After getting the green light from shareholders, Aditxt's board of directors decided on a very specific split, 1 for 250. That means every 250 shares of stock an investor owns will be combined into just 1 share. This March reverse stock split goes into effect in March, and the stock will start trading at the new split adjusted price very soon after that. Aditxt is doing this reverse stock split for one main reason, to get their stock price high enough to meet Nasdaq's minimum bid price requirement. It's a way to avoid being delisted and stay on the exchange. Even though the stock will still trade under the ticker symbol ADTX, it's getting a new CQSIP number. A CQSIP number is like a serial number for stocks, so this helps keep things organized after the split. To keep everyone in the loop, Aditxt put out a press release, which is attached to this filing announcing the reverse stock split. Now let's step back and look at the bigger picture. Aditxt is facing a serious challenge. They're at risk of being kicked off the Nasdaq exchange, which can make it harder to raise money and attract investors. The reverse stock split is a gamble. It might temporarily boost the stock price, but it doesn't fix any underlying problems with the business. If the company doesn't improve its performance, the stock price could just fall again. Delisting from Nasdaq can have a pretty big impact on a company. It could scare off investors, limit trading activity, and make it harder to raise capital. You can see all the details of this reverse stock split in the document Aditxt filed with the state of Delaware, which is attached to this filing as Exhibit 3.1 if you are really curious about it. In my view, Aditxt is in a tough spot. The company's direction is uncertain. While they're trying to address the stock price issue with a reverse split, they need to focus on improving their core business to create long-term value. A major risk is that the reverse split won't be enough to keep them on Nasdaq, or that it could turn off more investors. There's also an opportunity to use this as a chance to reset, refocus, and come back stronger. In conclusion, Aditxt's story is a reminder that staying on a major stock exchange requires more than just financial engineering. It requires a solid business and a plan for future growth. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. See you next time.